Alright, how's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. Alright. Still sick. But I'm here. Alright, so need to go in. Can you summarize what happened today to ATER? Yeah, it went down. What's up, Snotty? What's up? You get sick a lot. I mean, I've got kids in school, and, like, there are no masks anymore in school. So, like, kids are just spreading germs everywhere and giving them to me. It went down. Stream over. Night, guys. Yeah, I don't know. My kids are in, like, preschool and elementary school, so I don't know, just based off maybe the age groups. They're not as cognizant of, like, how not to spread germs, but, yeah, I don't know. My daughter's in kindergarten, so, like, and my son's in preschool, so there just seems to be, like, anything any of them get, they give to us. Plumber here, cast iron gut, never gets sick. I didn't used to get sick, and then I had kids, and now I get sick all the time. Because they bring home the plague, apparently. Did you see IR's response on acquisition posted in the Discord? No, I'll be honest, I haven't been on Discord all night. Did they actually address something? It's kind of what we wanted, so let's see. Alright. What's going on, guys? When's the bottom in? I think we're getting closer. I'll do two things. I will pull up two things here. What's going on, everyone? Yeah, let me pull up some stuff for you guys so I can show you. Alright, so sorry for anyone that's new, doesn't know I'm sick. I am sick, and put the kids to bed. And actually, there was some movie that was on that I was having a trouble, like, stepping away from. It was interesting, at least to where I got to, which was I think it's Mr. like Harlow's Phone or something like that. It's the new thing on Netflix. My wife was watching it, and I was like, Alright, so let me pull up these two things next to each other so you can see them. Let's do this one bigger, too. Oops. No. We'll get there. I promise. Alright. You notice here, this is Wyckoff accumulation. So, basically, Wyckoff was a very smart man who basically figured out that a lot of times when, even before, like, machines did all this stuff for people, there was a way in the market which basically these big institutions would try to basically, shake the tree essentially and try to get as much profit out of something when they were trying to, basically move a stock up or down. And so they're not always perfect. They don't have to look exactly like this. But basically what the concept is this. So you have an event where you have the stock driven down heavily, right? Now, I could go to the regular ATER chart and show you. So you have an event that drives the stock down heavily, right? Oh, that's APRN. Hold on. Let me pull ATER. So you could even consider possibly, and there's too much stuff to actually clean. I need to clean this up. But basically, let me see if I can somehow zoom this in a little bit more so you can kind of see what I'm talking about. All right. So hypothetically, if I removed all these fib lines and these, maybe you'll see a little bit better. Probably don't need these daily averages. These ones either. Is that making it any better for some of you guys? Okay. So, you have an event where the stock gets driven down. Now, this is not perfect because you can't kind of like cram it together, right? But the concept is this. It runs up high. Basically, this was this is distribution here, right? So the stock gets pushed down heavily here. And then it goes through a phase where it kind of bleeds off for a while. Yeah, Ben & Jerry's accumulation. Kind of feels like that when I'm drawing these out. But essentially then at the end of it, this whole thing, this kid and caboodle as they call it, right? What ends up happening is your spring test, depending on which Wyckoff accumulation this is going through or distribution, right? So in this case, we had a large push down. We had something that came back up, right? So this could have been the run from 49 all the way down to basically like 210. It ran back up, or maybe 304. Then it would have ran up to basically, I think it was like what was the second one? No, it was like 18 or 19, right? The first run went down, went back up to like 19 a share or 16 a share or something, whatever it was. It didn't go perfectly to this, but then it gets pushed down heavily, right? So we get down to our low, which was probably roughly 210, right? And then it ran back up to 7, like the 7 area. So we could just say, like, this is not going to be absolutely perfect, but we could say basically it ran up to our area of resistance, which was 7 in this case, and then bounced off. We had 2 basically tops, and then it's been running down, right? So now we would be on this leg here, which is basically from here roughly down to here. And so if you were to kind of map this out, you got one leg here. We had a slide up, right? That was the run to 3. And then we had another set of bleeding, right? So that would have been step 2. And then we had the slight little run up right before they diluted, and then this huge dump down, right? So this dump down here would be the spring itself. So this is where basically they try to find a bottom. So in simple terms, basically what's happening is they want to push the stock down until buyers step in. So they know what the absolute bottom is, right? So far, buyers have not stepped in yet. So what's going to happen is the stock's going to continue to get pushed down during the spring phase until basically it starts getting like, okay, well, now people are buying, so we need to start actually like, this is the test. Like, once buyers step in, and there's a good amount of them, especially on the institutional side, that's where you'll see the thing fly back up. So you'll see it fly back up. Let's pretend this is, I don't know, something sub $1. Let's pretend the support is $1 and they push it down to like, I don't know, 85 cents or 75 cents, right? So what they'll do is they'll continue to go down until they absolutely get tons of buying pressure back on the side of Ethereum. That means the spring is done. It's complete. They figured out what the bottom is. Now they've got to move through these areas of liquidity again. So let's say this is $1. Say this is, I don't know, like 2 something, right? We'll say this is roughly 3, 4, and we'll say this is maybe 5. So what should happen is we should have the spring all the way down. We should have an aggressive move up, who knows if it's a market rally or if it's a just a Tyrion only thing, maybe meme stock rally, where all these things have been pushed down because all meme stocks right now are getting just absolutely hammered. So maybe this is where they next swaps come from or whatever, but they eventually push the stock back up, right? So let's say it runs from basically 85 cents to we'll say 2 something, right? It would then go back down and then test the level of support here, which would be about $1 again. So you'll see it it will feel like, oh my God, we had a chance to get out and we didn't. This is them basically shaking out the last bits before the stock runs. And this has happened before on plenty of other stocks. You can go back and just look up, Wyckoff accumulations, and you can see kind of what they do at the bottoms. So what you're going to see then at that point is after the spring, we should see a bounce, and then we should start seeing this now would be maybe like the threes, like maybe the threes right here, right? Give pause, it'll come back down, look for areas of support, and then it's going to push up towards the resistances, which should be roughly anywhere between, 3, 4, 5. 5 is going to be a really hard resistance because your average Ethereum stockholder right now has an average around 5 because most of them have been averaging down, right? They know about the warrants now, at least that they've been listening to us or part of the Discord. They know, all these things. And so what ends up happening then is they come through and they will probably this will be the hardest area of resistance. And it may not get past there in the first run. It may take a while to get through that. And if they want to, this is where ATER getting delisted. No, they're not getting delisted. Delisting is actually a pretty long process. You basically get a notice for you're out of compliance, then you have 3 months to basically get back into compliance. If you can't get back into compliance, then it's another 180 days or something like that. So it can take a year. But yeah, I was going to say at this point right now, they're not really a candidate because they have cash. They have a new M&A they're going to announce, and they have plenty of cash to get through the next at least couple months. Where it would be a danger is when they don't have any more money and nobody's willing to basically buy their shares. That's when you start having liquidity problems, and you basically are okay, well, where you continue having to dilute even further, and so you end up with floats that are the size of a 500 million shares, and your stock's worth 25 cents. That's when you have to worry about being delisted. Us just crossing over the $1 is not a delisting thing. That's basically and then can a short squeeze happen by the end of next spring, or is this out of the picture? It honestly all depends on a couple things. So right now the short interest is low. It's much lower than it was. At least that's what the Ortex had said. Let's take a look at the exchange reported data. The exchange reported data basically said that shorts are starting to close their stuff, right? That's what it's at least saying. Now, we're in a weird spot right now, but let me show you on here where we are. And you should really read the response IR sent. They wrote in our chat. And where am I supposed to find it? All maybe somebody can, someone can link it to me. I really don't feel like it gives much insight. I'll be honest with you, I don't think they can say anything. Like, they're like in a, like, what's it called? Like a blackout period. So, like, they're not going to give us any extra information. They probably are just trying to, like, calm the nerves of people because they know that things kind of, like, hit a culmination today. Like, wouldn't if, you know, there's a bunch of people who, like, you know, I don't blame people for being angry. Like, that was, to me, a bad move on where they diluted. Like, so maybe someone's going to link me this thing so I can read it, but here we go. As far as the name of the brand, we can't do that in public. Reasons being that we stated in the prior release, it's securing market share in existing portfolio of the brand category. It will not control 2 listings in a category. It's our best not to disclose it. Okay. Yeah, I mean, that doesn't tell me a whole lot. But basically, they're just saying that it's securing market share in existing portfolio brands category, so we will not control 2 listings in a category for obvious competitive reasons. It's best not to disclose which are ours. Okay. I mean, like, I didn't think they were going to tell us, but I mean, like, we should see it on some filings at some point. If they acquired a company, we will see it eventually on some filings. I'm sure. I don't think they can keep that a secret. Like, they're having a branding disclosure thing. It's legality. Okay. At some point, we'll probably know who they are. I guess they, you know, I got nothing on that. I mean, to me, that didn't tell me anything. It just basically said that, you know, it's securing market share in existing portfolios brand category. So we will not control 2 listings in a category for obvious competitive reasons. And they're not going to disclose which ones are ours. Yaniv and Alea bought some shares today. That would be more interesting to me. Let's see. Is it filed? Because honestly, like, that's to me is the biggest thing. Is like, all right, if you're gonna really, like, put your money where your mouth is, like, you guys have received a bunch of shares for free, like, granted to you, sure, by your hard work, but, like, you haven't put your own skin in the game. I want to see you put your skin in the game if we're gonna be out here, you know, putting ours in. Like, that's how it works. Like, show me you have faith in the company. I want to see you put your money where your mouth is. So, all right. So let me pull up and see if we can see any new filings. Because some insider buying would be really nice at this point right now. I knew I should have bought pineapple. Peggy. I saw it 2 days ago, and I think Fish called it out. we said it was healthcare and wellness, right? So it could, yeah, air purifier could be, I guess, the thing, or instead of buying is on the Discord. I'll just look it up. Today is the 6th. All right. Let's take a look. Okay, Yanev acquired 47, right? 47,000 shares on the 4th, which was what was the stock price on that day? Let's take a look. Well, he bought it for what, 2? No, these are the warrants, right? No, it's just common stock here. Common stock warrant, right to buy, $2 conversion. Yeah, Paxton, you can't organize a pump and dump. That's literally the definition of an illegal pump and dump. Yeah, they would literally get in trouble for that. Check out the green text at the bottom for explanation. Okay, each common share was purchased with. All right, so these are the ones that came with the warrants, right? Because they basically combined the warrants and the shares, right? Yeah, so we already knew this because this was like basically like they were buying, shares and warrants at the same time. The one thing that I want to see, the reason why I want to see insiders buying, to be honest with you, is insiders lock up the float because most insiders are not like trading their stock. They're not getting rid of it. Most of the time they're long. So whenever you see insiders buying a stock, that's usually a good thing. It's the same reason why we liked it when we saw DTC, that there's been all these buys and it's from the CEO and the CFO. And they were not just like gifted those, they were actually buying it with their own money. So you like to see that. And I mean, sure, they're buying some, but like we said, like when you see a large piece of I showed you guys in the Discord, there's been a lot of insider sales because MacArthur and a couple other places left. And so all of a sudden, a float that was very locked up basically became very not locked up. Like when MacArthur was holding, this stock was a lot more squeezy. Ever since MacArthur's left, the liquidity on this thing's gotten really weird. And then I was going to say, not only that, but you also have literally a hedge fund, who owns now a quarter of. They'll have a quarter if they get the stock above 320, they'll own a quarter. Now they're going to pump and run it up and make sure they fall in guidelines, which is they're not supposed to own over 9.99%, but they're going to basically move that around so they can make money off of it. Just wait till November. Yeah, I mean, so here's the deal, right? So if you look at this, right, the step down, this is the spring. The spring will probably push us into late October, early November, right? So if you kind of look at this on this standpoint, right, here is 10.6, right? So We could go down slightly a little bit more. We could bounce. You never know. But I'm just showing you this for. Where's my little bad drawing? Here we go. All right. This is kind of an extreme, and I'm not really great at drawing these things, but this is just an idea. The 1, 2, 3. This is the spring. We could get down possibly. I drew it mainly to where we were, but like if we're going to be honest, this is 82. So let's just say anywhere between here-ish, right? And then I would expect it to kind of basically rise, fall. I mean, these are not perfect. I could, stretch them out a little bit. But this thing's going to basically go up, down, and then should run out at some point. At least that's the idea behind it, is that's how this would work. Now, if you look, this is earnings right here, right? So we could run up before earnings, possibly, right? So this was the goodwill impairment. They already got it nailed down. That's fine. This could be the end of the spring test. Now we could see some recovery. Say the market recovers. You never know what's going on, right? Yeah, so this is what I would more expect to probably happen over the next couple months. This is January, so the run could come in January. If you already look at the options on Ethereum, you will see that essentially there's a good amount getting built up in January. So let's take a look at January 20th. Okay, here we go. So look at this open interest right here. And you look, even like the 45s have a good amount of. So what's probably going to happen is this. Anyone playing up here is not being realistic, or they're playing solely for IV. So what they're doing is basically when the stock starts running up and the IV starts rising, these actually will have some value for the first time in a long time, right? So if you have a bunch of like really high out of the money IVs, when the IV spikes, these all of a sudden will be worth money. So that's why you would play this. You wouldn't play actually thinking it's going to 45. But that's why people do it, is because I'm just giving you guys like a heads up. Like these are probably smart money who's basically just playing an IV spike on this. Okay. This is where I'm most interested, because if you look at this, this is where the thing would start. So if all of a sudden they started slapping the ask and this stock starts running up, then basically market makers have to start hedging all these options that all of a sudden could be in the money. So you're looking at a couple thousand. You have to remember, these are all times 100. So like literally these could be, when this starts really getting filled up, and they probably will do it a little bit closer to the date, but you can already tell there's getting some open interest stacking up here. Like especially around like the $5 and up to like, the $7. Like that's a good amount of open interest. That's a good amount of open interest. It's a good amount of open interest at 350 now. Even 3 is getting stacked, and so there it goes. Over money, yeah. You came back for an interesting time. Yeah, just put your head in the sand again and you'll be fine. But yeah, so just wanted to throw this out there. So there's obviously something going on for January. That's starting to get built up. Let's take a look in November. Not really anything there. There's some stuff stacking up at 5. Nothing for the weeklies there. Nothing for the weeklies there. Probably should just concentrate on the monthlies. Should be here. Decent amount here. Not a huge amount though. So October 21st. But the reason why this one specifically would be the one, these two right here would be, this is right after earnings, and it's the last one before all of a sudden January has, like, so this stuff will get built up over time if this is where they want to make the run. So you may have to, be holding for a while. Obviously, another couple more months. We're going to have at least one more earnings in there in that time frame, which would be right here. And then previous years, just going back. That's August, September, October, December. So they don't announce first quarter until March. And so basically our fourth quarter will be here. And the first quarter doesn't get announced till March. So once we get this one right here, there's nothing for a while for earnings. So, and your cough sounds like an AR-15. I don't even know what that means anymore. Yeah, but I mean, essentially, what this, this, if you want it to be like weird, or not weird, but like, what are these ones? Let me see if we can do this right. I really just want to put out, I don't want fib lines so much. I want just like a horizontal. Does that work? Like if we were to basically do something like this. Oh, I gotta hit it again. Something like this, and then go back and do something like this, and possibly like this. So if you wanted to look at that fib, right, you basically would have this thing hit these bottom resistances. Now, we could draw these more like here-ish. That would probably be like the upper range. Depends on how you're viewing this. Like on a macro scale, yeah, this could possibly, be the thing where it goes back up to like 7 or something like that. If I was to move these down to like here-ish, maybe, and here-ish, this could be a little more like, so if I pull over the Y cough again, did I close it? I might have closed it. Where is it? You guys tell me what this looks like. Oop, nothing to show here. Like ish, I don't know. Maybe that's too steep. No, I don't want to pay. All right. So, don't know. It's not perfect, but, most of the time this doesn't follow exactly to a T. It's just basically a pattern. What is that, Anon? Like 2,500 in open calls, up to 10? Yeah, I mean, I think if you're... So here's the thing, right? So they have... Pretend you're Armistice Capital, right? How do you make the money, right? You make them on the shares, but at the same time, what do, right? You've got all this there, but you got to get... Like, you can only do this a couple times, right? So you got to get your bang for your buck. So what do? You play options on these things, right? Because no one's really going to stop you. Like... There's not going to be like a short that's going to basically stop you from running it up, because all they're going to let you do is let it run up, and then they're going to re-short it at the top, right? So like what you would do then is you would sit there and you would play options on this. So you stack up options while they're cheap, right? So the lower the stock price goes, the cheaper call options are. So what you do is you stack up a whole bunch of call options. You sell a bunch of puts that you're going to get paid for, not ever going to, because you're the one pushing it up, so you know you're not going to get assigned them. And so you just get cash for that. So you basically maximize your effort on this thing. You basically go out. No one's going to stop you from basically pushing the stock price up. Retail at this point is going to be your biggest enemy, because retail, once the stock gets into this range, is going to start selling, because that's where basically most of their this would be break even for retail. But what happens is people get caught up in the moment, right? So if we're running from $2 all the way up to $5, people are going to get caught up in the moment, and it's exciting. You all of a sudden see your money. You might even see some profit, depending on if you average down. You want me to look at October 21st for options? I mean, here's my thought, right? This might have been something that could have happened had there been a lot more of these ones filled up, but we're not, these aren't in the money at this point. The 150s are not in the money, and if this is a target for them right now, why let it go up there, right? Unless you're going to make the run this week, but to me, when they diluted down, the option chain got screwed, because now all of a sudden the stock that was hanging out here-ish is now all of a sudden here-ish. So yeah, I mean they could make it run this one if they wanted to stack it up, right? They could make it run on this. I just think right now what's more likely to happen is they need a catalyst. I don't think they can get away with just running the stock for no reason. They've already done it once. So in March, when the stock ran up, it ran up on no news, right? It ran up on no news at all. There was no we announced this acquisition, or they had nothing going on, and the stock ran from $2 all the way to $7. They might blame it on me for writing a DD that got interest, but here's the thing: I had nothing to do really with that run. That's what I've realized is the DD might have been their rationale behind there's some retail interest. Let's go ahead and just do it now. Because there was open interest in May, and so maybe they used that as we're here, might as well do it, even though they just got shares. But I think it'd be pretty bold of them to actually just run it up on no news again. So I think they need some sort of catalyst to run it up, and so the catalyst would probably be something that's announced on earnings, but earnings doesn't happen until November. So this October option to me is maybe before dilution, it would have been an interesting thing to watch. But at this point right now, I'm where do you see 17,000? Oh, you're adding up all these. Now, once again, you can't just add all these and assume a lot of these could be covered calls. You have to assume that maybe a portion of these are actually bullish calls, but you have to realize there's a lot of people on the stock that have been stuck on here and just writing covered calls on this thing. And they've got a lot of shares. So you can't assume this is all bullish. There could be a fair amount of people that wrote covered calls for October thinking it's not going to run. So just wanted to throw that out there. Don't treat these like these are all bullish. You have to take a percentage of them. Especially with Ethereum being down at lower levels, you have to realize that there was probably a good amount of people that wrote covered calls on these things. So, all right. So that's kind of what I've been seeing. Drawing's kind of crappy. Sorry about that. But, yeah, I mean, honestly, you make no premium on the, like, they might be like, but for some people, any money coming into Ethereum right now is better than nothing. So like I understand. For me, I haven't been writing covered calls because there's no money in it, and it's not worth my shares, to be honest at this point, because the IV is just too low. Like IV getting crushed right now, I think, is to basically make options cheaper before they run it in probably, like, I don't know, January, some sort of like Santa rally, and they'll have some sort of, press release that makes people go, oh, well, maybe Ethereum's okay, and like they'll move the stock price up so it looks like things are getting better, because keeping it down here at these really low levels for a long period of time just gives retail a chance to average down, which is bad for them, because the lower retail gets their average, and some of them will bail out on the way of them pushing it up, it makes it harder for them to actually push it up. Because if retail is unloading in 3s and 4s, it may not make it to where they want to, which is 5, 6, 7s. But yeah, right now we are completely oversold. Like, just to show you guys, if you're not familiar. All right, so just look at this down here, right? Like, we're basically, I think we're negative RSI at this point on the daily. So this isn't like, oh, we're on the 1 hour and we're oversold. We're on the daily and we're basically at like 0 or negative. Like on the weekly even, like we are now almost oversold on the weekly. Like, that happens very few times. And if you actually look on how many times it gets oversold on the weekly, what happens right after? All right, got oversold in the weekly here. We had a run up to 40. It gets oversold on the weekly here, right? This is the 304 drop. It gets oversold in the weekly there. Pops up to 19. Gets oversold now here on the weekly. And it will probably, I'm just saying, every single time it's gotten oversold on the weekly, it's popped back up and ran. Like, we haven't seen it go up and above on the weekly in a long time. But yeah, but to anyone that's like freaking out, like this is my point that I'm trying to make to you. All right, and this is an important thing, and maybe I need to edit this and make it into an actual video. But like, things don't last down here forever. Every single time this has happened in the past, it springs back up. Every time it gets pushed down, this gap down, sprung back up. We gap down here, we'll spring back up. Like, we gap down, we have gaps up here in the 3s, we have gaps here in the, like, 180s. Like, we've got all these gaps to fill on the upside. And, if you wanted to basically, remember I showed you, this thing could have, if you wanted to do an old school Wyckoff, technically the top would have been like back in the teens. I don't think it's going to run that high. I would be more in like the 5 to 7 range would be the top of the Wyckoff now with the dilution, but you never know. But yeah, like this thing's about to cross over on the weekly for oversold. It would not shock me to see it go a couple more weeks down and then get pushed up heavily. Yeah, this is RSI. We were at the levels of August before it ran to 19. Yeah, we're almost there. We're not there yet. So there might be a little bit more pain, but you look, like this is back in where we were in beginning of August. We get oversold here on the weekly and then quickly pop back up to 19. So yeah, Andre, you're right. Like we are going to be there, and if you look at the other time it got oversold on the weekly, it was here when it was at 142, and it went from 142 all the way up to 47. So yeah, there's no gaps on the bottom. So I mean, on the daily, you look at it on the daily, like we are completely oversold. Like on the daily, got completely oversold here, ran up. Got completely oversold here on the daily, ran up. You know, now we're completely oversold here, a couple more days, and it'll spring back up. Like, this happens. And so if you're in Ethereum and you want to know what's going on, we're just oversold. There's nothing really new or exciting. Like, this is just part of the stock market. I'm just personally annoyed because I didn't feel like the dilution was necessary. And, you know, if Ethereum wants to address that at some point, that's fine. I disagree on when they issued it. I know they're trying to strengthen their balance sheet going into earnings. I know that they're basically sitting here going like, well, we're going to do an M&A before earnings to show them that we care. That's good and great. The problem I have with it is it was really poor timing to do it in the middle of a market crash and then dilute near all-time lows. Like, to me, that's not the smart move. Like, you know that they had warrants, and I know you have a relationship with Armistice, obviously. They're located right down the street from them, and I'm sure they know each other through just the New York thing, but like in the New York finance scene. But at the same time, you knew the stock was going to go up, right? Like, issue out an ATM, hold on to it, and then get some money where you don't have to dilute at the bottom. Like, here's the thing, though. As far as dilution, every time AMC diluted, they ran. It's not true. So every time AMC diluted, it was already running. Like, they issued the ATM into those runs to basically stop it. I understand why they were doing it, because they wanted to raise as much cash as possible, so you do that when the stock is running. But it's like causation does not mean, or correlation does not mean causation. Like, just because AMC was running does not mean that because AMC diluted, they ran. That's something Adam Aron said, and Adam Aron, honestly, is an idiot. I shouldn't say that. Adam Aron is not an idiot. Adam Aron basically pretends to not know what's going on when he absolutely knows what's going on. Adam Aron is a Wall Street guy. He understands what's going on, and he basically allowed the shorts to get off the hook with his stock. Like, that's the plain and simple truth. I looked at what was going on with AMC at the height of it, and shorts were actually screwed. Shorts were actually screwed. And he issued the ATM and killed it. Like, before it even got to take off. Like, that was nothing what it could have been. Give me the dates of dilution. I'm not going to dig through the filings. Give me the dates of dilution. This here in 2001, right? This January run should have been so much higher. Yeah, that Mudrick thing was a really bad play, and he has ties to Mudrick. I remember them issuing out the stuff to Mudrick, and Mudrick screwed them, or they screwed themselves technically. Is that what they did? They flipped the shares for a couple bucks, and then the stock ran after that, right? Mudrick reportedly flipped 8.5 million shares. It bought 8.5 million shares through an offering, and then flipped it for a tidy profit. But if they held on to it, it ran up from 36 to 72. Yeah, I wouldn't say that was the reason why it ran up. So they bought them at 27 and they sold them at 3208, or sorry, 3204, right? But it ran all the way up to 72. Yeah, I don't consider that Mudrick, oh, we sold some shares so the stock ran up. Like, it was running anyway. They just happened to be in the middle of, like, dilution when that happened. But it's also, if you think about it, a legal way of getting shares onto the market that shorts desperately needed. I'll be honest, I think it was actually the opposite. I think they allowed basically Mudrick to get those shares. They brought them onto the market and then were able to sell them onto the market, which actually increased liquidity on the stock, killing the squeeze. No, it like hurt the squeeze. I disagree with your assessment. I think they actually got that. They got legal shares from the company and then were able to give them back to the market, which actually increased liquidity, meaning it was easier for shorts to find shares. The whole point of a squeeze is not to give up liquidity back to like Wall Street. It's basically to take away liquidity. And so I think AMSR knows what he's doing. And that was basically, he's going, quote unquote, okay, I will play ball with you guys, these short hedge funds, because he knows what's going on. So he's like, you just help me, like I'll scratch your back, you scratch mine. We'll issue out an ATM. You guys help, we're basically giving you guys a break and not doing what GameStop did, which was allow it to go absolutely parabolic. And maybe the SEC was on that. I don't know all the details, but I'm just telling you, AMSR was basically selling shares, and people are like, oh, he's older, he's in retirement. F that. Like, they took bonuses. Here's my issue with AMC. AMC was a stock that was getting run into the ground under his leadership. He should be kissing the ass of every single quote-unquote ape there is, because they literally saved his job and his company. AMC should have squeezed really, really hard, like GameStop style. And they didn't, because he keeps issuing out shares to rescue these shorts. My issue with this is this. He knows better. He knows how this game is played. He wanted to issue out another ATM, right? But the AMC people were like, no, we don't want any more dilution, right? So what does he do? He issues out a preferred share, which basically in the form of quote-unquote ape, and tells everyone it's a great idea, right? He's ready to pounce. And what does that do? It absolutely killed AMC. Like, that's the honest truth. Like, look at AMC since basically they issued out ape. So here's the problem. If they keep issuing out, and that's fine. They're paying off their debts. I get what they're doing from a business perspective, Andre. Here's my issue with them, right? If AMSR keeps funding everything with your shares, you will never squeeze the stock, because he's always going to keep issuing out shares to further raise cash to pay off their debts. The stock is going to be so many shares that even if it runs up to, all right, so say, for example, you bought at $40 a share, right? You know how many shares you're going to have? No, I'm talking about AMC for a second, but I'm just saying, like, you know how many shares you're going to have by the time he pays off all the debt? That AMC had billions of dollars of debt. This is my issue with them, right? They eventually may be a fine company, and they'll be worth maybe, depends on how much more dilution they have on the table, but like, AMSR knew that was not going to be a good thing. Yeah, I mean, trust me. Even when it went up to like 20, whatever, people are still upset. Now, the AMC's got a big gap to fill, but I'm just telling you right now, like, it will go back up at least to fill up some of those gaps, right? There's a huge gap up here which should fill at some point. But man, like, ever since they issued out that, it's been rough, right? all these meme stocks are all getting killed. Like AMC, even like, GameStop. These are all really, really like, I guess the more low was 19. Is that the more recent low? 19, double bottom there. Yeah. Yeah, and AMC will probably gap fill that thing at some point, but like, weekly options, donkey eats poop. Yeah, like if yeah. So, I mean, all these meme stocks have just been absolutely hammered down. Like you can go across the board on pretty much every single one of them. Every single one of them is just getting kind of bled out, and this is probably during like the cycle what's going on, right? Like every one of these things. I mean, even like ones like BBIG, they're looking like they're probably consolidating. I mean, this stuff's insane. Yeah, Vlad. I mean, you can do whatever you want with your money. I mean, for me, I would like to see a nice rotation back into, like, if like, for example, the Apples of the world and the, games, or not, what's it called, like Amazons. Once these get down to more reasonable levels, like not pre-pandemic stuff, I will be putting more money back into these. But right now, these are still really highs, like, pretty big highs as far as like, we had a massive bull run. This was 80. This thing, I know this is after split, but like, all these stocks right here made pretty massive runs in the last bull market. Are they only giving us from? I don't know why that is. Is it because they only have 3 years? Let's do 20 years. I mean, look at this thing. Like, you could argue this looks like a longer, like, Wyckoff, and they're starting to basically, I'd like to see these come to pretty normal levels. I mean, look at Tesla, right? All these things are on massive, like, runs, and at some point they're going to come down, and there'll be a better price on them. And that's what we would like. We would like them to actually come back down a bit, right? Maybe to, more like this area, and that's where some long entries will be. So, would ATER do a DRS report every earnings? I mean, I think if people actually DRS their shares, yeah. I mean, I DRS'd like a whole bunch of them in the beginning, and nobody followed suit. Everyone was like, well, you can't sell. I'm like, do you want to sell down here? Like, honestly, do you guys want to sell down here? I don't want to sell down here. Like, that's how you lock up a float. That's what GameStop's doing. Look at GameStop. GameStop keeps DRSing every single week, and their goal is to basically lock up the entire float. I've got my shares in Computer Share. I mean, yeah, I don't plan on selling any GME. I think GME is the only one that's actually got a shot at actually, like, changing the industry and changing how things work, because, I mean, I've never seen retail basically trying to lock up an entire float and actually doing it. Like, people talk about it, but organizing retail is like herding cats. Like, you can't do it. Everyone's out for themselves. Nobody's, like, altruistic. It's money. Like, it matters. But GameStop seems to be the only one, and it's because they got screwed. GameStop was going to go parabolic, and they basically just said, you know what? We can't allow this to happen. We can't let the little guys win. And so, we cover Crocs. Is this literally like Crocs? Okay. Plastic foam shoes? Sure, we can cover them. I'll do this one. Yeah, I'm just hoping GameStop doesn't dilute on us, because at some point they're going to need cash. And they've been burning through a lot of it. So that's my only fear on GameStop, is they're going to move the goal line. Like, all these, apes have been basically just putting their money away, blocking up the float, and I fear that at some point they're going to do an ATM and move the goal line even further. They're going to say, well, GameStop, sorry, we need a little more cash to, get through the next couple months. And it's a company right now that's literally burning, it's burning through a good amount of cash right now. Yeah, and the NFTs, it's still in beta, but it's not profitable at this point. Like, none of those things are bringing in huge amounts of money. So, rubber shoes sell. Hey. All right, let's see. Do we have any information on this? They're big enough where... All right, so they are a $4.88 billion market cap. It looks like they've got 55.5% institutional ownership, only 6% dilution. Does not seem to matter on this one. That's because they're a big company. Most people... So FMR, BlackRock, Vanguard, all the big guys are in on them. So they've got 61 million shares outstanding, so smaller float. It's roughly like or a couple million less than like 20 million less than the Ethereum now. Was it 61? Yeah, so it's about roughly 19 million less than the Ethereum's shares outstanding. But see, this is nice. This is a good increase in revenue. My kids have Crocs, so yeah. Are they going to trend down? I mean, it depends on what their forecast is. I mean, these are like real stocks, so you can actually kind of like they'll announce like what they're planning on doing, and what they should provide some sort of guidance most of the time. Even if they lower it, that's fine. Their cash did go down, but overall assets did go up. Looks like they built up some inventory right now. You got some money in accounts receivable. To me, that's good. Now, the only thing that's bad is they increased their liabilities a huge amount. So their total assets and their total liabilities both just skyrocketed. So they've scaled it up, which is great, but they're scaling up into a bad economy, or at least potentially a bad economy. So they could fall a little more, depends on how much stuff they get, caught up in. They bought something called Hey Dude. Casual footwear. Yeah, I mean, let me see if I can pull this up without... Okay. Let me see if I can pull up Morningstar for you. Crocs for you. Okay, Crocs. All right. So right now, okay, that's a pretty nice... I think that's generous, to be honest with you, based off what I saw. But here... They're saying the fair value is 170. 5-star buy would be basically buying under $84. Personally, I think that's a little high, to be honest with you. But I do think that anytime you're going to get something, I would say probably more like 75 and under would be, and that's pretty close, would be like a 5-star buy on this. Going into like a possible recession, like you got to lower these a little bit, but like, yeah, this is a stock where if it falls much further, I probably will start like adding some shares. At least in the, I guess the short term, I could see it going down slightly more, but it's the same time, there's going to be a lot of discounts on a lot of good stocks, and they look like they're growing, is what I can tell you. Their revenue growth over 3-year annualized is 28%. Their net income increased 143%. Profitability, return on assets, 17.81%. Return on equity is 127%. Their net margins right now are 19.08%. So their quick ratio is 1. Their current ratio is 1.94. Debt to equity is 6.17. That's not great. The price per book is 9.85. So yeah, like at some point, probably worth getting a couple. I'll probably just keep an eye on them. But yeah, there you go. We're talking about rubber shoes. Hey dudes are as popular as Crocs around here. We're talking rubber shoes, Anon. I'll stick with Crocs and cost. Okay. I don't know anything about Hey Dudes, but it sounds like you guys know them, so that's a good thing. Alright. It's midnight. I'm going to get out of here. I got to get to bed and get some rest. I'm still trying to shake this cold. Every morning I wake up and I just got a face full of snot, but there you go. Alright. I'll put the link to the Discord. If anyone is not part of the Discord, come please join us. It's free. Come hang out. Talk about stocks. Learn something. Teach us something. Whatever. But here's the link in the Discord, and you guys have a great night. And snotty to you, goat. Night, guys.